Welcome back. You're still tuned into Trading Hour. JM Financial is in focus after reporting their Q1 numbers. Net revenue surged 22.5%, but profit after tax more than doubled as compared to last year. Nishit Shah, who is the Group CFO at JM Financial, is joining us now to take a few questions. Mr. Shah, good morning. Thank you so much for joining in. Well, it's been a good set this time around, and this quarter, the profit was also supported by strong recoveries that we saw in the private market segment. That's where we've seen a 5 times jump in profits also on a YOY basis. Tell us what's the outlook on recovery in coming quarters. You had earlier indicated it will be around 300 crore rupees every year. Do you stick to that guidance?
Yeah, good morning. Thank you for having me on your show. So I'll just give you a background on the results. Apart from the recoveries, we've had a strong momentum in terms of net revenue growth as well. So it's up around 22%. Even the pre-provisioning profit is up 22% on a year-on-year basis. While there has been a recovery, there has been a strong performance all around, I would say. In terms of the recoveries, we've had a reversal of around 200 odd crores this quarter, which translates to a recovery of approximately 230 to 240 crores. So we are pretty much on target in terms of the recovery. As far as the next few years are concerned, the efforts are on. So we continue to stick with the guidance.
Can you just, for the benefit of our viewers, Nishit, can you tell us what the guidance is?
Yeah, so we had provided roughly around 900 crores over the last 2 years. And we've been stated that we'll recover one third in each of the 3 financial years, 26, 27 and 28. Some part of 26 is done with, and that is the reversal that has come through in the PNL.
Got that. So 900 crores of provisions will be recovered in the next 3 years. Also on private credit, what is the current book size? Because you had also given a guidance of achieving 10,000 crore in, I believe, by 2030, FY30. Tell us a little bit more about your private market syndicate book, because that seems to be clearly the growing market space for you.
Correct. So we are around roughly 6,000 odd crores. We had guided that we would hit 10,000 crores by in the next 3 years. We've seen very good momentum in terms of transactions, both on the syndication side as well as on the loan against share side. So that guidance is also pretty much on track.
Won't you beat the guidance if you're already at 6,000? 10,000 doesn't seem so far now.
Yeah, so there will be a mix of syndication. So as we say, as we have earlier guided, right, it's not focusing more on the loan book on the balance sheet. It's also having a syndication effort, which will really help us in terms of the ROEs, because you generate a lot of fee income on that. So that is kind of the business that we want to underwrite. So it's not necessarily loan book growth, but it's also an element of syndication which is involved here.
Nishit, firstly, thank you for joining in. The AMFI data that came out yesterday, it showed a lot of resilience. It was a multi-month high in terms of equity inflows. You've also gained market share for your asset management business at around 4.3% currently. Now, with the data that has come in, where do you see your asset management business being placed going forward? And is there an aspiration to take that market share from the current levels to past 4.5% and then maybe even go to 5%?
Yeah, that's a great question. So on the wealth and asset management side, we've had strong execution. If you really look at our strength of our relationship managers and sales employees, that has gone up by almost 45 odd percent. If you look at really the recurring AUMs, that has gone up to almost 31,000 crores, which is up 37%. And that is actually now constituting 27% of our overall AUM. In terms of our mutual fund business, we've hit almost 12,000 crores in terms of non-liquid AUM. That has increased by almost 80% in the last 1 year or so. You are right in terms of the market share. There has been an uptick, and obviously with the kind of execution and the expansion that is going on, we will strive to keep improving on the market share.
Okay. Nishit, your affordable loans segment, that saw some margin compression this time around. What's the outlook on margins here? What's the target with the affordable housing segment? How do you plan to grow it? And the guidance that you have here?
Yeah, so affordable housing, the guidance is pretty clear. We are roughly around 3,000 crore of assets under management right now. We want to take it to 5,000 crores in the next 2 years by FY27 and eventually hit 10,000 crores by FY30. That's broadly the guidance that we have. In
Okay.
terms of your question with respect to the margin, it's a one-off. It's largely on account of some of the assignment transactions that we have done, but it's more like a one-off.
So, Nishit, how much of your book is LAP? Because some participants are seeing some pressure that has come by. Your gross NPAs have also increased. Is that also a one-off? If you can explain that in greater detail.
Yeah, so that's also kind of one-off because we have a strong collections team as well, which is focusing on the recovery part. And to be honest, these are like less than 10 lakh ticket size loans, really. So the recovery does happen, and that is the trend that we have seen in the past. So I wouldn't read too much into one-off spot in the gross NPAs.
All right, Nishit, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of JM Financial, the stock though, is off the highs of the day. But we take a short break. More on the markets on the other side. Stay tuned.